So let's get started with the DXY. So the DXY, we can see that price is currently within this channel and it's approaching a potential double bottom area. Now we do have some compression. Now what I'm expecting on, let me just get this. I'm expecting price to retest this level. Clearly there's some equal lows here, but to take it one step further, I'm pretty sure there'll be a stop hunt of the equal lows. Then we can get a rally to the upside as plan A, simply because normally when you see some equal lows, market psychology and the masses will be trading this double bottom, right? So if we just map at the equal lows, it's a very, very common pattern, such as this level here. We've got some equal lows, double bottom. So normally what happens is you see the double bottom, traders will be taking it. However, there's normally a stop hunt of the double bottom, then it goes long. It's a schematic that I trade over and over again. So right now I'm expecting a potential stop hunt of this double bottom and a rally to the upside if we get a close above this compression. Now again, compression is a pattern I also trade very regular, which is something along the lines of this, when price is really compressing within a running channel. So as you can see, price normally after compression, once you can spot this tool is really interesting that you can practice your pattern analysis. So again, we've got compression, break to the downside. Here we've got compression to the downside and we've got a break to the upside. This is now a larger compression. This is a smaller example, as you can see. So this particular compression formation is really something similar to this. If we can highlight the similarities just by extending it just a little bit, don't they look a little bit similar, right? So if this broke out to the upside, there's a chance of this breaking to the upside as well. So I'm expecting price to close above this running channel and close to the upside based on previous market data. However, I'm also prepared that I could easily be wrong. You know, I'm not going to marry one outcome. I'm really prepared for multiple scenarios and multiple probabilities. So again, we do have a setup where if we break this with momentum and we get a retest, then we can obviously decline towards a potential third tap of the outer structure. We've got one tap, two tap, and a potential third tap. So there's multiple scenarios in play right now on the DXY. We just need to remain really patient. Also, something that's interesting is the current cycle. You can see, look, there's momentum, small correction, momentum, a larger correction. Again, we've got some momentum, bit of a correction. What's likely to happen next? Momentum to the downside. So we're definitely coming here. There's a high chance of that. Now, what happens here remains to be seen. We could either react from this level and rally, depending on how price approaches that level, most likely on the 1 hour or the 15-minute. So if price now approaches this level here, again, with momentum, there's a chance of it continuing to the downside. However, if it's approaching it in a compressive manner, such as this, then we could expect this level to be respected and rally to the upside, most likely just a little bit below the double bottom zone. Normally you can expect a stop hunt, and we can also identify some unfilled liquidity just below. We can see there's momentum, there's lots of liquidity here that has not been filled yet. So it rallied and it missed it multiple times. So this is a clue right now. It's a clue that's telling us that price could potentially reverse from that level. So I'm monitoring that price really closely. Let me just tidy this chart up 1 second. Okay, here we go. So right now I'm expecting a stop hunt of this current zone here, bearing in mind that many traders are going to be taking this double bottom or even taking the top of this trend line here, right? And the stop loss will be just a little bit below. Now, simply by knowing market structure, we can avoid everything. So there's a chance of traders getting triggered in and their stop loss getting taken out, and they'll ask themselves, why am I getting taken out? It's the markets, it's manipulation, they blame on the banks, this and that. But really it's you need to understand market psychology and certain schematics and smart money concepts that happen over and over again. So for now, on DXY, let me just delete this. I'm just expecting a stop on of this double bottom and a rally to the upside. But like I said before, if we break this level here and we breach this level of liquidity with momentum to the downside, then yes, we can expect price to form a third type of the outer structure. So again, you need to remain very flexible and unbiased with every single setup. This here is irrelevant. We don't really have to have this pattern there. So again, what we can do as well, we can now update the pattern. Let's go on the daily time frame. We can just update it to, this is more of a fake out. So for now, what takes precedence is what's happening here. Also, what I like about this setup is, okay, we've got some nice structure and we've got a nice clear arc. This arc indicates a double bottom potential scenario and a rally to the upside. So I'm likely anticipating a potential rally and a stop hunt, but I'm also prepared for a break and retest. Whichever comes, I'll be taking it most likely on the Euro USD. So this is the game plan for DXY. Okay, so next on the list is dollar CAD. Dollar CAD, dollar CAD, dollar CAD. So if we zoom out on dollar CAD, what can we see? What can we see? We can see that price is currently within this larger expanding pattern. We've also got the same fractal, which is this pattern here, within the same pattern. So right now it's looking pretty bearish. However, there's a few scenarios going on dollar CAD. What can we see? We can see now that price is broken from this wedge. I can extend it to here. The reason I'm doing this is I'm focusing on what's relevant. What's relevant right now is this current pattern here. This current pattern here is what's important. This pattern here is irrelevant, but it's just there as a guideline. Once price rallies, then yes, I can extend it. But right now, this is the most relevant piece of price action. So I'm separating the patterns. It's called pattern separation. You can just call it that. So right now, this is what's looking interesting. We've got a breach of structure. Took at the equal highs, as you can see. This happens over and over again. Whenever you see equal highs, there's a big chance of the double top traders getting stopped out. And this was happening now. However now, okay, so we've got a new high. As you can see, it's made a new high. Got the previous high, new high, previous low, potential higher low to go long, right? Since we're expecting a rally to the upside. So again, what can we actually anticipate? I'm anticipating a potential rally from this level towards any of these unfilled liquidities on the smaller time frame and a rally to the upside. However, I'm also very wary that on the 4-hour time frame, the way price is approaching my potential long entry is with momentum. Look, there's 3 strong bearish Marabuzo candlesticks. Do I really want to set my order at this level, even though my analysis is a long? And I'm also anticipating, I'm actually 50-50 on the DXY. There's a buy setup and there's a sell setup. Which one am I going to take? Whichever one it presents it sells first. So right now, just like the DXY, I also have a buy setup and I have a sell setup, which should be approximately down here to retest the outer structure. So again, we've got 1, 2, and a potential third tap down here. But again, which one am I taking? I need to wait until the market tells me which one is going to be the correct direction. So because there's momentum towards my bank levels, I'm not interested in taking a buy setup just yet, unless however, if I was to get a reaction from either of these levels with some momentum, that's confirmation for me. Then I wait for the retest, I'll look for some unfilled liquidity, and then I'll get involved in a long. That's the confirmation I'm waiting for. To clarify things, for further confirmation, I'll be waiting for, again, a strong rejection. Once we get a rejection, I'll be expecting the same schematic, which should be some equal lows. Once I see some unfilled liquidity over here on the main rally, this will be my entry to go long. So I need something like this for me to even consider buying this market. For now, setting a buy limit here for me is a little bit risky. Now, I'll be waiting for the same schematic, but on the flip side, once we break these lows. So for now, I'm just remaining a little bit patient on dollar CAD. I believe there's CAD news today, I'm not too sure, but I don't really look at news, so it'll just cloud my judgment. So that's the game plan for the dollar CAD. So again, the longer targets would be either if we get a rally from here, we can easily tap this levels of liquidity and confirm a third type of this structure. So 1, 2, and 3. If that fails, then I'm just doing the same on the flip side, which is a 1, 2, and 3. So right now market's in the middle, but there is a clear setup presenting itself. So that's the game plan for dollar CAD. Next on the list is dollar yen. This was a trade I took earlier in the week. I've only taken 2 trades this week, which was dollar yen and euro pound. So dollar yen was the first trade I took. So this is my setup. If I just go on the 4-hour time frame, I've got the fib extension up here from A, B, C, and D. Obviously, I saw this high getting breached. It then retested a level I had marked out. So once this level retested, I wanted to wait for a break of structure for confirmation. It then broke structure from originally this significant high here. The reason this one is relevant is simply because this was the main move that took at the previous low. This is we've got, look, lows, lower low, lower low, and the move that took out the previous lower low was originally this move here. So that was my signal for a confirmation. So okay, we've got a new high now. So now what am I waiting for? I'm waiting for what I wait for normally all the time, which is some equal lows. So again, if I see some equal lows, I'll be taking the next trade to the flip side. And what do we have? We have some equal lows. We had a rejection here, nice equal lows. Once price was here now, which is approximately around here. So again, I'm trading the same schematic over and over again. You know, I had the rejection of the bank level to the left. We got a break of structure to the left, which is the first confirmation. Then I'm waiting for the same schematic over and over again. So this is the first bounce. This is the equal lows. Once I saw this, bearing in mind there was a break of structure, we've got the equal lows, I then decided to set my order around here on some unfilled liquidity that I spotted on the smaller time frame. I think it was on the 1 minute, the 5 minute. So I set my order. So what happened next? Okay, I'm also prepared where, you know, if price approaches my order and there's momentum, I'm closing the trade. It's as simple as that. If there's wicks and compression, then I'm holding a trade. So what actually happened, you know, just to find it, you know, a little bit clearer. Okay, I set my order. Whoa, okay, it missed it and it formed a spike. Okay, fine. I'm still leaving my order. I'm still confident with the trade. Then there was a bit of a rejection. Am I worried that the trade is going to miss? You know, I'm going to miss my trade and I would have missed out on some decent gains just because of some bullish price action? No, because price is more or less programmed to fill the levels of unfilled liquidity. It's very rare for price to just bounce off actual supports. It normally has to fill the levels of unfilled liquidity. That's what the liquidity is at. So okay, it done that, then it rallied. I'm still holding my trade, I'm still holding my actual order. And it's 2 pips above the actual bank level and 2 pips below the stop loss. Then it's approaching my level. I'm like, okay, fine. There's some nice wicks. I'm liking this. I'm gonna hold this trade, hold the order. Then this happened, you know. Okay, I saw some equal lows here again, so I set my order just below. Now, what am I going to do if I see this trade? Am I gonna hold it after this very strong bearish Marabusa candlestick and be stubborn with my trade and trust my setup, quote, quote? No, I'm not. I'm coming out. So I decided to come out at that was a 0.4 R loss. So I decided to come out, took the loss, which is fine. And then eventually, you know, I was correct. And since then, it's just been dropping and dropping. And price just has been forming bearish structures. So we've got momentum, compression, momentum, compression, momentum, correction. You know, so I'm not interested in this trade. So that was the thought process on dollar yen. If we just go to the live market, what's actually happening? It's just messing around. You know, I'm not interested in this trade anymore until we take out this. Then once we find some sort of setup and my schematics below this level, so somewhere around here, then I'll be looking for a buy setup. But for now, everything in between for me is just irrelevant. And again, yes, you know, I can have some confluences there if it presents itself, but nah, there's nothing really going on. So for now, dollar yen is it's a no until sometime next week. So that was the thought process on dollar yen. Okay, next on the list is euro pound. Okay, euro pound was a pretty decent trade. So again, same sort of schematic. If we just zoom out to the actual structure, we have this larger pattern that broke out to the upside with some momentum. We also forecasted this small compression which broke out to the upside. So right now, it's really, really bullish right now. So I found and spotted a schematic to get involved in a long. So all these levels is something that we forecasted in the previous live streams. Again, what have we got here? Look, compression. Look to the left, some unfilled liquidity on the smaller time frame, which you're not going to see. You won't see on the 1 hour. You'll see on the 5 minute to the 1 minute. That rallied, retested to the left. Again, it's respecting these levels very, very, very clearly. Again, it rallied, and when I did finally decide to take this trade, if we go to the 1 hour time frame, we saw this was the main move. We got a nice strong rally to the upside. First of all, it took out this particular low, so there was a stop hunt. That's the first confirmation. And we also have this equal low set up here. So okay, we got a rejection. It then rallied. Once this bank level became valid, I'm now looking for the nearest level of unfilled liquidity on the retest, and this retest for me was here. So that was my game plan for euro pound. And eventually, yes, price triggered me in. I didn't feel no FOMO whatsoever when I saw this candlestick here, because I know there's a big chance, 95% of the time, it's going to retest this level to grab liquidity, to take out these equal highs. So you need to always think very contrarian when you're trading FX. So okay, we got the rejection, we've got momentum. Once I saw this, I thought, okay, cool, I'm gonna set my order below a level of liquidity that I spotted, and eventually, yes, it did trigger me in. So everything here for me is irrelevant. If there's a buy setup, sell setup, I do not care until it approaches my level. Eventually it did, and it approached it pretty decently, had a small wick. The next candle was pretty bullish on the 15-minute time frame. It was consolidating. I did like the compression towards my level. This is another reason why I held it. and I just held my trade. Now, let me walk you through what actually happened. So the trade, okay, this here, it was a very, very small stop loss. So my stop loss was based on the previous low. So this here, it didn't really faze me because I trust my setup since I've back tested it religiously. So okay, market went in my favor, and you know my target was 9R. Cool, my target was 9R, and it missed my order. So the mistake that I made, which I'm a bit gutted, is that I do the same with my take profit. So my actual entry is normally 2 pips above the bank level, as you can see here, and 2 pips below the stop. And my TP is also 2 pips below the actual bank level, which is here. And I forgot to set my TP 2 pips below. Otherwise, it would have been a sniper entry, sniper exit, which is something that I normally forecast. On this occasion, I completely just made a mistake, which is fine. But I still trust that because of the unfilled liquidity, which is all the way back here, which you're gonna see on the smaller time frame, we can see it here, break momentum, and it filled the retest. So price is gonna come in, it's gonna be a magnet. In terms of when, we don't know, but it will go there. If we go to the actual time now, the actual market, hold on. Where you at? Okay, so price missed it. Now I'm gonna hold my trade because it needs to come, it needs to fill liquidity. It's already taken out these retail traders, the double top, but there's still unfilled liquidity, and it's given us a clue. This spike here, just imagine it's a big finger saying price is coming here. This is what this spike to me indicates. This spike indicates price is coming in. It's just a big finger. Or even if you see a shooting star, something like this is just pointing towards here. Whereas retail will think, oh, it's a shooting star, it's selling pressure from the sellers and it's gonna drop. No, it's the opposite. It's actually coming above it. So that was the thought process on euro pound. And what did I do? I said to myself, you know what? Let me wait and see what happens. I then began, I saw this candle and I thought, okay, it's fine. It's just a bearish candle, not the end of the world. Second bearish candlestick, I thought, okay, let me wait a bit, because the last thing I want is for price to feel some level of liquidity here and then go long. It's going to really annoy me if I see like an 80% pullback. I'd rather take profit. So, okay, the next candlestick was pretty strong and bearish, and that's when the warning signs are kicking in. So first of all, originally there was bullish momentum, these three candlesticks, but then price changed and it formed a strong bearish candlestick. Now I must have been busy and I never saw what happened next. I came back to the charts when this happened. Once I saw this, I thought to myself, hold on a minute, there's a price has changed. There was bullish momentum, now there's bearish momentum, and we have a bit of a bearish flag going on. So am I going to hold this trade up here even though it's likely to come up here, or would maybe I could put my stop loss below this, but it doesn't make sense. I might as well close my trade approximately around here since it just looks like a bearish setup. So what happened next? It just it ranged. I closed it at a 5.4. No, it was actually 5.3 approximately. So I must have closed it somewhere here. So it consolidated, and it just looked like a mess. Then eventually it dropped to the downside, and then I can update the pattern. Now I don't want to be in this trade. Obviously, it's just it's completely changed. It then respected this outer structure. So right now it's just literally just consolidating. It's deciding where to go next. Likely it's going to come up here to take out these highs. I think eventually it's just really, really choppy, consolidating. So the main setup was here. I like catching momentum. I don't want to be in a trade holding it too long. And this is dropping. Go to the 1 hour, speed it up a bit. And then boom, it hit the level I've been forecasting. So really this should have been my entry and I should be taken out. And now it's dropped to the downside, you know. Now we can update this. It's now from the larger pattern. So that long consolidation has now formed a larger consolidation. And now it's looking pretty bearish. Most likely what's going to happen next, I don't know, I'm not in this trade. I'm moving forward to the next trade. But for now, I can see price coming to minimum these levels over here. Somewhere here. Now what happens next? Are we going to get a rally to the upside or a break of structure? We don't know yet. That's for next week. So that was the full process on Euro Pound. I made a big mistake. Should have really ended the week on 9R, but instead it was a 5.3, but it's fine. Okay, next on the list is New Zealand CAD. Okay, New Zealand CAD is a trade we've forecasted all week on the mastermind group. So okay, we had some equal highs and we have some unfilled liquidity. It triggered. Did I take this? No, I didn't, simply because I didn't see any equal highs or any significant pattern that I'm interested in, especially because normally with this particular setup, this happens a lot. Is, you know, we got momentum, then we get some form of some equal highs, then we get a stop hunt. After the stop hunt, yes, we can get a drop, but then there's normally a second stop hunt. This is where I like to get involved on this particular trade. So this is my plan A. Valid, fine is valid, and my plan B is just above. So I'll be waiting on plan B for a potential entry. And where is my target? Below the equal lows on some unfilled liquidity. I'm just trading the same schematic over and over again on both sides. If we zoom out on the daily, we can actually see that. Now notice how I'm not extending the trend line, because this changes everything. It looks like a break and retest back inside the trend line. Or we can just do this. But for now, I'm separating the pattern and I'm focusing on what's happening right now. So okay, we've got momentum to the downside, compression, it rallied to the upside to take out these highs and fill the level of unfilled liquidity. Most importantly, what's really been happening is these equal highs have now been taken out. Doesn't have to be perfect all the time. So they've been taken out, and surprise, surprise, one tap, two tap, third tap liquidity and some unfilled liquidity on a smaller time frame, and this is completely dropping. The price is very, very bearish right now. So I'm expecting price to decline towards these levels. In terms of an entry, okay, plan A is valid. But do I see a setup? I don't really feel confident taking a sell right here. So I'll rather wait for a further confirmation on a sell. Now, it's pretty choppy. I'm either gonna let this play out, and if it drops, it drops. I don't care. But then plan B, I'm more focused on plan B. So what we could do is we could now potentially start to draw some sort of structure. And we can see that there is actually a chance of price coming towards that third level tap right there. So this is plan A. Again, the reason I like this setup is because we've got the equal highs. We then have a stop hunt of the equal highs, but then I'm expecting a second stop hunt. This is where I like to get involved. But for now, you know, I'm going to remain patient. I do like, you know, I can see there is a bit of compression, so it could come up for sometime next week. But we'll see on dollar CAD, and it'll be a really, really decent risk reward trade on dollar CAD, since, you know, we can enter somewhere here, stop loss just above somewhere approximately. See, I can't do the stop loss now because no, I'm not going to do the stop loss now, even though it looks like a decent trade, but I'm pretty sure I can get an even tighter risk reward. But I need confirmation, and I need more patterns and schematics to tighten my stop when price is at that level. So I can't really anticipate a stop loss for now. So that's the game plan for Kiwi CAD. Next is pound yen. Okay, so pound yen again is something we forecasted during the week. Am I in this? No. I'm not in this, but surprise, surprise, we've got some equal lows, and we have some compression, and we have some unfilled liquidity somewhere here, which I haven't really mapped out yet. But if we zoom out to the 4 hour, 1 tap, 2 tap, and a 2 tap, and a third tap. It's a pretty decent schematic. We've got the equal lows, then we've got a stop one of the equal lows, and to take it one step further, it's looking pretty decent since we've had a fake out of the trend line. So many traders will be trapped on the wrong side for a sell position. So with pound yen, I'm now waiting for further confirmation, catch a retest, look for some equal lows, then I can catch the stop hunt, then I'll be looking to get involved on some level of unfilled liquidity here, that's TP1, and further up if we do get a rally to take out these highs. So that's the game plan for pound yen. Just keeping it really simple. That's if it comes. Obviously, if it completely drops from here, then I'm prepared to sell this if my schematics come. So that's pound yen. Cable. Okay, cable's looking pretty sharp. We've got 1 tap, 2 tap, and we have a third tap. What else is happening in the third tap? We can clearly see we have tap, tap, and I'm expecting a potential third tap. We've got the equal highs. So plan A would be some unfilled liquidity that is just above the trend line, which is in confluence with the third trend line bounce, right? 1, 2, and 3. Now plan B is if this fails, then the higher probability trade is a fake out of the trend line. So normally what you can have is you can have your perfect channel, but then normally on the third tap there's normally a fake out. So this is the trade that I'll be looking at, especially because there's some equal highs here. So this is my plan B. If I see some bearish schematics at plan A, then I'll be taking this trade. So it really depends which one comes first. So that's the game plan for cable. How is price approaching these levels? We don't know yet. There's a bit of momentum. Really, it's going to take out these highs sometime today, but there's no buy setup for me, so I never took it. So we can zoom out, and on the bigger time frame, yes, there's lots of room to the downside on cable to minimum 1, 2, and 3. This would be some unfilled liquidity. It will be a stop hunt of this low here, which is a good trade. But then this would be my TP1, since it's the first level of unfilled liquidity below these equal lows. So that's the game plan for cable, and then I can expect a strong rally to the upside. But for now, this is a good short setup. So that's cable, and yeah, I believe that's it for today, guys. Hopefully you guys enjoyed today's live stream. I'll see you guys next time. Take care, everyone. Bye bye.